all the miners, all the exchanges. Like there's a very, very diverse ecosystem. You know, the Chinese, the Russians, the foreigners, the Americans, every possible business, every possible holder, you know, even the regulators, they all have some say one way or the other. And the truth is, the reason Bitcoin works is because nobody wants to change it.
MicroStrategy CEO Michael Saylor, a vocal advocate for Bitcoin and the driving force behind MicroStrategy, ambitious Bitcoin acquisition strategy, sheds light on the implications of Bitcoin's recent dip below the $100,000 mark. While the decline has sparked concerns about the cryptocurrency market dynamics, Saylor emphasizes that Bitcoin's decentralized, immutable, and borderless nature ensures its resilience in the face of price fluctuations. Bitcoin operates as a decentralized financial system collectively governed by a diverse global network of stakeholders, including individual holders, miners, exchanges, businesses, and regulators. This interconnected ecosystem unites participants across ideologies and geographies, ensuring that no single entity or institutional player, MicroStrategy included, can unilaterally influence or alter Bitcoin's protocol. Saylor highlights that Bitcoin's immutability and decentralized consensus mechanism are key to its success. The system's resistance to change ensures its security, censorship, resistance, and adaptability, even as it faces external pressures. Modifications to Bitcoin's protocol require broad global consensus, safeguarding its foundational principles and maintaining its integrity. Although Bitcoin's price drop may impact market sentiment, in the short term, Saylor argues that such fluctuations do not compromise the network's core governance or role as a digital store of value. Instead, these price movements offer opportunities for reflection on Bitcoin's long-term potential, particularly in a world increasingly valuing digital sovereignty and decentralized financial systems. For Saylor and other Bitcoin proponents, the recent dip underscores a key principle. Bitcoin's strength lies in its ability to maintain stability and trustworthiness amid market volatility, driven by a collective commitment to its unchanging principles.
You notice that if the volatility goes to zero, the options are worthless. So for example, if you calculate the call rate, if you hold $1 million of USD and for 30 days, you're getting an annualized interest rate of SOFR, about 4.8%. If you hold $1 million of the S&P index, you're getting like 15%. If you hold $1 million of IBIT, before the options market on IBIT, you couldn't get anything, but just in the last month when the options came alive, you can get like 80 to 100%. And with MicroStrategy, you could get 200%. So the volatility actually creates a really strong call rate. I mean, it attracts the hot money and the traders, and that's what creates the options market. And without the volatility, you can't sell a convertible bond. In order to sell a convertible bond, you need a volatility of more than 45. The S&P is 15. So if you're holding the S&P index or real estate or gold or bonds, you can't sell convertible bonds. But if you're holding Bitcoin, which is 60 vol, or if you lever Bitcoin, and we lever the Bitcoin to get to 120 vol, we can rinse and repeat that trade. We can, in essence, issue $1 billion in convertible bonds, buy Bitcoin, wait a month, do it again, wait a month, do it again, wait a month, do it again. So we're the most prolific issuer of convertible bonds in the world because we're the ones that have the best use of proceeds. What do you want? You want the thing you invest in to go up faster than the S&P index, and you want it to stay volatile, more volatile than the S&P index. And there's only one commodity in the history of the world that checks both of those boxes, and that's Bitcoin. And if you were risk adverse and if you diversified it, if you basically had half Bitcoin, half real estate, or half Bitcoin and a bunch of bonds or whatever, the volatility dies and the performance dies, the fire goes out, and you can't keep raising capital. So MicroStrategy has gone 100% Bitcoin, and we're pursuing all those various capital markets. And there's just large pools of investors that they need to buy. The people that trade equity want equity. The people that trade options need the options, and the people that trade the convertible bonds need the bonds. And they can't buy Bitcoin. They don't want Bitcoin. They really want the other instruments. And so we provide them that security they need. I think every company in the world should recapitalize on Bitcoin. So like that's 400 million companies. So I think all 400 million should. I think every family, every individual should. I think every government should. I think Microsoft should recapitalize on Bitcoin. I think your bakery should. I think all the Bitcoin miners should. So yeah, everybody should recapitalize on it, right? You're talking about capitalizing on an asset that's 60% ARR, 60 vol, instead of an asset, the US dollar, that's 0 ARR, 0 vol. Another way to say it is, I think we ought to put an internal combustion engine in every horseless carriage. I think we ought to put a gasoline powered engine in every house, every plane, well, every train, every automobile, every factory, right? I mean, I want to put a fire in every vehicle on the planet. That's what Henry Ford did. That's what John D. Rockefeller did. They put a fire in everything. And I think you could think about this as a crypto reactor fueled by Bitcoin. Bitcoin's the fuel. It's a crypto reactor. We should put one in everything. Now, in terms of the business model, let's think about the generic idea. The generic idea is you have assets. If they're going up 0% a year and the cost of capital is 15% a year, you're losing, it's minus 15% a year. Your capital is being destroyed. So that's the US dollar treasury strategy. The Bitcoin strategy is plus 45% versus the cost of capital. So everybody can do that. Meta, Apple, Microsoft, Disney, everybody can do that. Every Bitcoin miner.
Michael Saylor argues that Bitcoin's volatility creates a lucrative opportunity for businesses and individuals to recapitalize. He highlights the Black Skulls equation to emphasize that assets with low volatility, like the US dollar, offer no returns, while Bitcoin's 60% annual volatility allows for higher profits. Saylor illustrates how companies like MicroStrategy leverage Bitcoin's volatility to issue convertible bonds, which traditional assets like real estate or the S&P index cannot support. Michael Saylor advocates for Bitcoin miners to recapitalize with Bitcoin instead of investing in depreciating mining hardware. He argues that Bitcoin increases in productivity by 60% annually while mining equipment loses 60% in productivity. Due to depreciation and diminishing returns, Saylor criticizes traditional investments in assets like NVIDIA chips, which also depreciate, and suggests that publicly traded companies should sell equity and debt to acquire Bitcoin. This strategy allows for significant profit growth in positions, Bitcoin as a wealth-generating crypto reactor. Let's watch more clips from the interview.
The more important point is every Bitcoin miner should recapitalize to Bitcoin. That's the important point, right? The big idea is there's like 20 publicly traded miners. When you raise $1 billion and you buy Bitcoin mining equipment, you're buying hardware which is depreciating 20% a year physically, where it's getting 20% a year less profitable because of the hash rate, where it's getting 20% a year less profitable because of the protocol, or 10%. So you're buying something that is minus 60% a year in productivity. You're investing in an asset which is losing 60% a year in productivity. When you buy Bitcoin, you're investing in an asset which is increasing 60% a year in productivity. So it's a very simple idea. Why would you burn 60% of your money every year, throwing it into a competitive hardware business where the protocol is taking you to zero, when you could increase your capital by 60% a year by simply buying the asset which the entire world wants? So that's what Mara is doing. That's what HUT 8 is going to do, right? That's what all the enlightened miners are doing. I think the fiat miners somehow think it's better to invest in data centers or invest in hardware. And by the way, you could say, well, we're going to switch to NVIDIA chips. The only difference between NVIDIA chips and Bitcoin mining chips is NVIDIA is depreciating 20% physically because it's burning out and obsolescing, and then another 20% depreciation because of competition. So instead of minus 60% a year, it's minus 40% a year. And so I think that if you're in the crypto ecosystem and you're a publicly traded company, you ought to recapitalize the Bitcoin. You should sell equity and you should sell debt to buy Bitcoin. You're going to make money. You'll rinse and repeat. you're going to go from a $5 billion or $2 billion business to 10 billion, 20 billion, 40 billion, 80 billion, 160 billion. That is the Bitcoin way. The fiat way is you're going to invest in expensive electricity, expensive data centers, and depreciating NVIDIA chips or in depreciating in Bitmain chips. And that's basically taking you to zero, right? And that doesn't really make a lot of sense. Now, every other company in the world, every zombie company, every restaurant, every hotel, every travel company, every airline, every whatever, they've all got a US dollar capital structure. It's like you got a wood-burning stove in your house, and I'm telling you, put a crypto reactor and fuel it with Bitcoin, and you'll have unlimited clean energy forever. And the most useful thing we could do is get that word out and get people to wrap their head around the idea of a crypto reactor on your balance sheet where Bitcoin is the fuel. And if you do that, then your balance sheet becomes a wealth-creating asset.
Bitcoin has recently fallen below the $100,000 mark, trading around $97,700 after hitting a high of $100,000 last week. This drop is largely attributed to profit-taking and security concerns following Google's quantum computing advancements. Long-term holders LTH have been selling their Bitcoin after seeing massive profits, with some sitting on an average gain of 326. As a result, liquidations have surged, with over 1.7 billion wiped out in the past 24 hours, including $1.55 billion in long positions. The market is also reacting to Google's quantum computing chip Willow, which has raised concerns about Bitcoin's security. Willow could potentially crack the cryptographic algorithms that protect Bitcoin, posing a risk to its security. However, experts agree that while this technology is groundbreaking, it is still years away from breaking Bitcoin's encryption. Nonetheless, this highlights the need to develop quantum-resistant Bitcoin systems as the market faces uncertainty. Attention is shifting to upcoming U.S. economic data, including the Consumer Price Index (CPI) and Producer Price Index (PPI), as well as jobless claims. These reports could influence the Federal Reserve's decision on interest rates. A rate cut expected with an 85% probability could be positive for Bitcoin, as a lower interest rate environment boosts liquidity, benefiting risk assets like BT. Bitcoin has been trending upward, breaking out of a 7-month falling channel and continuing to trade above its rising trend line and 20-day simple moving average. However, after failing to sustain the $100,000 level, the price has dropped. While there are signs that buyers could push for another attempt at $100,000, there are concerns that the bullish momentum might be fading, as indicated by bearish divergence on the Relative Strength Index. A breakdown below the 20 simple moving average could open the door to further losses, potentially dropping to levels around $94,000 or even $85,000 as we wrap up. Do you believe that Bitcoin's productivity increases by 60% annually, outpacing traditional investments? Should companies, families, and even governments recapitalize with Bitcoin to leverage its volatility and growth? Don't forget to like and subscribe, and let's keep this bull run going.